Hey, what's going on, guys? My name is Richard, and welcome back to the weekly watchlist video. As always, we'll go through all the stocks on my watchlist, and we'll talk about both their fundamentals and Marketsmith, which is sponsoring this video, as well as the technical setups I plan to use for each of these stocks. If you enjoy my analysis, please go ahead and leave a like down below. It really does help me out and my channel, and subscribe if you are new and looking forward to more videos just like this one. And one more thing, if you want to join this week's stock picking competition, go ahead and submit your ticker symbol down below in the comments to be involved. At the end of 10 weeks, there will be prizes including trading books and gift cards, so make sure you submit if you want to be considered for those prizes. But with that said, let's go ahead and jump into the video and talk about Bill.com. Looking at the earnings and sales, you can see it's not yet profitable, but does have substantial revenue growth at around 50% the past 4 quarters. And last quarter, sales were up 46%, although margins were still down 7.1%. And taking a look at the annual EPS, you can see that it's not supposed to be profitable within the next 2 years. The overall EPS rating is a 3, the Group RS is a B+, the SMR rating is a C, accumulation distribution is an A-, and the overall composite rating is a 71. And looking at the fund ownership, you can see a nice increasing trend, and you have 3 high-quality funds investing into this company. And taking a look at the chart, you can see it was in a stage 1 cup and handle, though it kind of failed that setup and instead pulled back to the 50-day moving average on lower volume. And looking at the RS rating, you can see it's a 97 overall, which is very strong, and the RS line is still hanging in there, although it's not quite at all-time highs. And as for entry setups, you can see it had a shorter term stochastic cross, as well as a lower Bollinger Band bounce indicator, so you could enter early next week if it continues to act well. And overall, looking at the price and volume action, you can see it was increasing on higher volume. It found support right here on high volume, and then kind of drifted higher, then consolidated on lower volume when a lot of the top growth stocks were decreasing on high volume. So I do think it's a positive that on these declining days, it wasn't on above average volume. And overall, I like the touches of the 50-day moving average on these 2 days, and it seems like it's found support at this level. So that is Bill, and next up we've got DQ. And overall, taking a look at the earnings and sales, you can see a nice acceleration pattern the past 4 quarters in earnings, sales, and after-tax margins. And last quarter, earnings were up 244%, sales were up 108%, and after-tax margins were up 22.4%. And looking at the annual EPS numbers, you can see in 2020, it's supposed to grow 121%, and in 2020, a further 46%, although revisions are down. The EPS rating is a 93, the Group RS is an A+, the SMR rating is an A, accumulation distribution is an A-, and the overall composite rating is a 99. And taking a look at the fund ownership, you can see an increasing trend over the past 2 years, although it did decrease this past quarter. And you don't have any high-quality funds investing into this company. And taking a look at the chart, you can see it just emerged from a stage 2 cup, and after it broke out on this one day, it pretty much has gone sideways. And overall, it's pulling back nicely to the pivot and could present another buy point if it moves up from here. And the overall RS rating is a 96. The RS line is close to new all-time highs, which is a positive for me. And as for the entry setup, I'm looking for a green dot early next week if it continues to act well and starts moving up. And what a green dot is, for those of you who are new, I've gotten a couple comments about this, is basically a 10-4-4 stochastic cross where this red line crosses above the blue line, indicating a short-term momentum shift. And the teal dot is very similar, it's just on a different time frame. It uses a 5-2-2 stochastic cross instead of a 10-4-4 stochastic cross, which is the green dot. So that's what I'm looking for, and I really like the setup of a green dot over a green line. So that is DQ, and next up on the list, we've got Fastly. And this has been one of the true market leaders of this bull market, and it did pull back very hard last week, so I'm really looking for some support, some volume to come in as it moves up in price. And taking a look at the earnings and sales, you can see substantial revenue growth, although it's not yet profitable, and last quarter sales were up 38%, although margins were still down 9%. And looking at the annual EPS numbers, you can see it's not supposed to be profitable in 2020 or 2021, although it is getting there. And the overall EPS rating is a 23, the Group RS an A+, the SMR rating is a D, accumulation distribution is an A, and the overall composite rating is an 86. Looking at the fund ownership, you can see an increasing trend over the past 2 years, but you don't have any high-quality funds investing into Fastly. And taking a look at the chart, you can see it has been moving up quite sharply and really got knocked down last week, as I said, and overall the RS rating is a very strong 99, although the RS line is decreasing from the peak. So overall, what I want to see is for the price to outperform once again and the RS line to move up sharply and challenge these all-time highs. And as for the entry setup that I'm looking to use, I did say in the video where I covered this as my stock of the week, and that will be linked above, that I'm looking for a pullback to the 21 EMA. And the 21 EMA, the purple line right here, it definitely did pull back to that. So what I'm looking for now is a bounce off that line and a green dot entry setup, hopefully on above average volume. And looking at the price and volume action, these are negative days, these 2 days right here, where it dropped on above average volume. So I really want to see confirmation that funds are buying back this stock as it moves up on above average volume. So that is Fastly, and next up we've got Lululemon. And overall, looking at its earnings and sales, you can see that it did have substantial growth a few quarters ago, but last quarter did have a significant drop due to COVID. Last quarter, earnings were down 70%, sales down 17%, and after-tax margins were up 4.4%. In terms of annual EPS, you can see in 2021, it is supposed to take a hit, but it's supposed to bounce back nicely in 2022. The EPS rating is an A2, the Group RS is a C+, the SMR rating is a B, accumulation distribution is a B+, and the overall composite rating is a 90. And looking at the fund ownership, you can see a nice increasing trend. And you've got 4 high-quality funds investing into Lulu. And as for the chart, you can see it is currently in a stage 1 flat base. That's great. And you can see that the pivot is at 324.76. And overall, the RS line is right near all-time highs. The overall rating is a pretty strong 91. And as for the specific entry setup that I plan to use, I want to see a break of this downward trend line right here. And in TC2000, you can actually just set an alert for that, and it will text you and email you when that happens. And you could also use a green dot entry setup if it acts well early next week. Next up on the list, we've got Okta Inc., which is an old friend. And looking at its earnings and sales, you can see it's not yet profitable, but it does have nice revenue growth at about 50% the past 4 quarters. The last quarter, sales were up 46%, although margins were down 4.4%. And looking at its annual EPS, you can see it's not supposed to be profitable within the next couple of years, though it is getting there in 2022. The EPS rating is a 58, the Group RS is an A, SMR rating is a D, accumulation distribution is a B-, and the overall composite rating is a 93. And taking a look at the fund ownership, you can see a nice increasing trend, and you have 5 high-quality funds investing into this company. Looking at the chart, you can see it's pulled back from its previous high, although the RS line is hanging in there, and the overall rating is a pretty strong 94. And for the entry setup, I want to see a green dot on above average volume early next week. And once again, I don't like this bar. This is a bad bar because it declined, closed right near the low of the trading range on above average volume. So if the stock starts to move up, I really do want to see volume confirming that move. So that is Okta, and next up we've got SDGR. Taking a look at the earnings and sales, you can see it's not yet profitable, but it does have decent revenue growth the past 4 quarters. And looking at its annual EPS, you can see it's not supposed to be profitable within the next few years. The EPS rating is a 6, the Group RS is an A, SMR rating is not available, accumulation distribution is a C+, and the overall composite rating is a very poor 58. And looking at the fund ownership, you can see a nice increasing trend, and you do have 1 high-quality fund investing into this company. And taking a look at that chart, you can see it pulled back from that key Livermore level. It wasn't able to breach it this time, and overall the RS rating is a very strong 98, and the RS line still has some work to do to get to those all-time highs. And as for the entry setup that I plan to use, it did have a short-term stochastic cross on this past Friday, as well as a lower Bollinger Band bounce, so you could enter next week if it continues to act well. Next up on the list, we've got C Limited or SE, and taking a look at its earnings and sales, you can see it's not yet profitable, but it does have very strong revenue growth, over 100% the past 4 quarters. And this was my stock of the week, so if you want a little bit more information about this company and what it actually does, go ahead and hit the link above right now. But anyway, looking at its annual EPS, you can see it's not supposed to be profitable within the next 2 years. Its overall EPS rating is a 45, the Group RS is an A+, the SMR rating is a D, accumulation distribution is a B, and the overall composite rating is a 90. And looking at the fund ownership, you can see it's increasing nicely over the past 4 years. And you do have 1 high-quality fund investing into this stock. And taking a look at the chart, you can see that the overall RS rating is a 98, and the RS line is decreasing from the peak, so I do want to see this move up along with the RS line. And as for the entry setup that I plan to use, I want to see it move up from this 21 EMA on above average volume and have a green dot entry. That would be my specific entry setup. So that is SE, and next up we've got Spotify. And taking a look at its earnings and sales, you can see it hasn't been profitable the last 2 quarters, but it does have decent revenue growth at about 20-25% the past 4 quarters. And looking at its annual EPS, you can see it's not yet profitable and won't be for the next couple of years. The The EPS rating is a 30, the group RS is an A+, the SMA rating is a D, accumulation distribution is an A+, and the overall composite rating is a 92. And looking at the fund ownership, you can see a nice increasing trend, and you have 4 high-quality funds investing into this company. Looking at the chart, you can see it gapped up on above average volume, and since then has drifted higher and is now consolidating. And as for the RS rating, you can see it's a decent 96, and the RS line is hanging in there right at all-time highs. And as for the technicals, what I'm looking for is a green dot entry setup, which is very close to having early next week if it acts well, and I want to see that happen on above average volume. And overall, I really like how the Bollinger Bands are squeezing right here. That's a good sign that volatility is decreasing, and usually that is a good indication that you're picking a good entry point. So that is Spotify, and next up we've got SQ or Square. And overall, looking at its earnings and sales, you can see nice growth the past 4 quarters, although you can see it wasn't profitable this quarter. But overall sales were up 44%, but after-tax margins were down 0.6%. And looking at the annual EPS, you can see it's supposed to have a big knockdown in 2020, but it's supposed to recover nicely in 2021. And the EPS rating is an A3, the group RS is an A+, the SMA rating is a B, accumulation distribution is an A, and the overall composite rating is a 98. And looking at the fund ownership, you can see a nice increasing trend, and you have 6 high-quality funds investing into this company. And taking a look at the chart, it's had a nice run so far in 2020. The RS rating is a 96, and the RS line is right near all-time highs. And as for the entry setup that I plan to use, once again, it would be a green dot entry setup if it acts well on above average volume. And I like this accumulation right here, and I don't like this bar right here. It is a negative bar because once again, it was decreasing on above average volume, but putting this into perspective, you can see there's a lot more up volume than down volume. So that is Square, and next up we've got Tesla. And please be aware that earnings are in 3 days for Tesla, and really for any of the stocks that you're looking to buy or currently own, know when they're supposed to report because it's so important to manage risk during earnings season. So with that said, looking at the earnings and sales, you can see nice jumps past 2 quarters. Earnings were up 143% last quarter, sales up 32%, and after-tax margins were up 3.8%. And looking at the annual EPS, you can see it's supposed to have a big jump in 2020 and add on a further 175% in 2021. The EPS rating is a 66, the group RS is an A+, the SMA rating is a C, accumulation distribution is an A-, and the overall composite rating is a very strong 98. And looking at the fund ownership, you can see a nice increasing trend. You've got 4 high-quality funds investing into Tesla. And looking at the chart, you can see the RS rating is a strong 99, and the RS line is right near all-time highs. And as for the entry setup, it would be a little bit late to take up an entry at this time if you're a position trader, but if you're a swing trader or even a day trader, it has been coiling nicely, getting really, really tight right before earnings. So you could use an entry setup of a green dot on a daily time frame or even a 65-minute time frame, or you could just use a break above this high right here at 1550. So that is my plan for Tesla. I actually already own this from way back here. So I'm looking to just manage my risk before earnings. So that is Tesla, and next up we've got TXG. Looking at the earnings and sales, you can see it's not yet profitable, but it does have nice revenue growth the past 4 quarters. And looking at its annual EPS, you can see it's not supposed to be profitable within the next 2 years. The EPS rating is a 16, the group RS is an A, SMA rating is a D, accumulation distribution is a B, and the overall composite rating is a poor 73. And looking at the fund ownership, you can see a nice increasing trend, and you have 8 high-quality funds investing into TXG. And looking at the chart, you can see that it's drifting higher. The RS rating is a 90, and overall the RS line has been pretty much flat over the past few weeks. And as for the entry setup that I plan to use, it did have a green dot on this Friday, so you could enter if it acts well early next week. And I want to see a big increase on above average volume, and I want to see a breakout above the short-term resistance at about 93.44. So that is TXG, and next up we've got Wing. And taking a look at the earnings and sales, you can see it wasn't profitable until this quarter. Earnings were up 23%, sales up 15%, and after-tax margins up 14.6%. And in 2020, it's supposed to get a big jump in annual EPS of 42%, and it's supposed to add on to that in 2021, up 19%. The overall EPS rating is at 87, the group RS is an A-, the SMA rating is not available, accumulation distribution is a B, and the overall composite rating is an 86. Looking at the fund ownership, you can see a nice increasing trend, and you have 6 high-quality funds investing into this company. And taking a look at that chart, you can see it's moved up nicely from the March lows. The overall RS rating is an 89, and the RS line is kind of basing right now. You do want to see it move up and challenge these previous all-time highs. So that is the fundamentals, and looking at the entry point that I plan to use, it did have a green dot on decent volume on this past Friday, so I want to continue to act well and challenge these previous all-time highs. So that is Wing, and lastly, we've got ZSCALA. And taking a look at the earnings and sales, you can see that it's had decent growth the past few quarters. Last quarter, earnings were up 40%, sales were also up 40%, and after-tax margins were up 8.2%. And looking at the annual EPS, you can see it is supposed to drop in 2020, but it's supposed to recover nicely in 2021. The EPS rating is a 48, the group RS an A, SMR rating is an A, accumulation distribution is a B+, and the overall comps rating is a strong 95. And looking at the fund ownership, you can see a nice increasing trend over the past 2 years, and you have 2 high-quality funds investing into this company. And taking a look at the chart, you can see it had a nice breakaway gap on earnings, and overall the RS rating is a strong 97, and the RS line is right near all-time highs. And as for the entry setup that I plan to use, it did have a short-term stochastic cross on this past Friday, so I want to see it continue to move up early next week, hopefully on above average volume. And as for the price and volume action, you can see it did have a bad drop on this past Monday, along with a lot of other growth stocks, but putting it all into perspective, it's been acting incredibly well and holding that 21 EMA throughout this entire move. So that is my plan with ZSCALA, and overall this is one of my top 3 setups along with Fastly and also DQ. So that's my analysis and my plan for this week. Thank you guys so much for watching. If you enjoyed, please go ahead and leave a like down below and subscribe if you're new to the channel, and I'll see you guys in future videos.